welcome back to Mainstation. So since my last video was about USMJ, I figured that, well, in addition to that video, I should make a Canadian MJ video, or usual stocks I'm looking at. And, well, here I am with another video. Tomorrow I think I won't be posting one, but I'll get into this later. So, to get started, well, this is CGC, Canopy Growth Corporation, and well, we had our very nice bull move, and as you might know, I talked about this descending wedge we had for quite a long time, and I didn't trade. I don't even know if I trade any of this move, but well, we're now in a very clear equilibrium. I thought that initially when we had our big move and when we started to get further up, that we would come back down. If we would have come back down, well, this prediction was a bit too drastic, and if we pull up a Fibonacci, then I almost forgot what Fibonacci is. Well, you see, it was only a retracement to the 0.382 and not to our 0.5, so this is quite bullish. And well, our equilibrium is bullish too. This is a consolidation phase after a bull move, so this would indicate that if this breaks, then it will most likely break to the upside and then see further upside and increase in price. So we have a very clear equilibrium with our high, maybe our pivots will be graceful this time, well, almost, with our high of 5181, and we now have calling price action between our prices right here, our high, low, lower high, most likely with our bullish day to day. Oh, wow, this is amazing. Wait, oh, no, okay, never mind. With our bullish day to day, we most likely have now found our high low. So I would look for actually another lower high compared to basically $50, and after that I think after finding her lower high, we would find a short-term higher low, or we will just find a lower high, consolidate a bit, and maybe form a bull flag and then see upside. Well, this can also just play out for the next few weeks too. Depends on how bullish the general sentiment is, and well, how long this can play out. Well, of course, most likely, I think most likely this will break either next week or the week after. So I think this week is too soon, and well, I think if this breaks, then you can, of course, just ride it up. There's room to the upside, in my opinion. This is a very nice move. Very clear very clear price levels, and our all-time high of 59.25 isn't too far either. So we are actually quite near all-time highs. I mean, of course, they're still like 20 to 30, like 30%. If I measure this from now, there was like, yeah, 30% almost. Until all-time highs. This isn't too much, considering that we moved 6% today. So yeah. Well, if you want to enter, you can enter upon this consolidation phase. In my opinion, since this looks quite bullish, and I wouldn't see a reason why it should break bearish. Well, yeah. So I would still wait for it to break lower highs and basically reach up above $50, and then I think there would be a solid entry point to have a daily swing position, or even long term if you're looking for bigger investments. So, just scratching my nose, it's itching. So, yeah. Moving forward to TGOD, we actually had our equilibrium break today, so this is nice. And well, we had a prolonged bear run. This isn't over yet. This is still a lower high compared to our lower high of 498. And well, I would look for, I think this is a very clear lower high compared to this. So I think if this breaks, maybe we can draw a trend line actually. If this breaks, and well, I think we would look for an upside. This can also move into either inverted head and shoulders or a cup and handle if we come back up to 432, and then we can look for well, firstly for an upside, but I think a short-term consolidation phase for forming maybe a handle or a bull flag. It really depends on the price action, but I think most likely we will reach back up there since we now have broken our equilibrium. You can see we have a high, low, lower, high, high, low. It's been, you can almost look at this as a bull flag. And well, I think we most likely can back up right here. Then we will consolidate and break this high and break this high too. We can also just surge up and break both highs with 2 big trading days. And well, this would be of course a bit more bullish, but we actually have quite a big resistance around $5 and around 498. So this is heavy resistance, and if it's going to break, it should be with big volume to ensure the confidence of our bulls. So we actually now have a true 200-day trading, so this is nice. Well, for now it's not too important, but it most likely will get into maybe our next 2 months. This 200-day will be getting more important over time, so you should be considering that. Also, this will be, well, it could act as resistance since it's around this area where heavy resistance is incoming. So this would actually be nice. And maybe if we look at the 4-hour, well, yeah, it has been acting as resistance lately. Also not too significant, since the movement has been mostly under it. But on the 4-hour, we are actually now coiling. All moving averages are pretty much at the same level, and we would look for, well, the price is above moving averages, so this is of course bullish on the 4-hour. So, well, if you want to enter, then I think you should wait until 432 is reached and broken. If it's reached and when we see short-term consolidation, which I would predict, then also we are a bit extended on the other side, but it's not too bad. Then I would say you can enter upon a retest of recent of like these highs, and then then enter your position and trade upwards. But of course, if we see a big trading day breaking 432, then you can also enter. But even then, I would be cautious. Well, if if you just measure our percentage, well, there's actually quite a big room on the percentage level. Like up here, we still have now like 8%, and to our important resistance area, we still have over 20% gains to be made. So if you're looking for a bit more short term, then yes, you can of course enter when we break 432. You still have over 10%, 15% almost gains to be made until our heavy resistance. But if you are a bit more long-term investor, then, well, depends on if you're looking at technicals. You should be cautious at this level. This is still quite important, and yeah. So if you're more short-term, then yes, you can enter upon breaking 432, or even now if you're very confident in this move. But I think this would be a very wise decision. If you're short-term and if you're long-term, then you should be cautious upon our heavy resistance incoming at around $5. So yeah, I think that's it on TGOD. Moving on to TLRY. This is actually quite nice, and I like this move very much, or I like how it moves. If you look at it on daily, then we have a very clear and very tight, actually, equilibrium. And we can also, of course, draw trend lines. Not too important in my opinion, but as you see, very clear. Well, on the top here, you shouldn't draw any, but it's still very clear with our high, low, lower, high, low, and actually our pivots are acting quite nice on this. So it is interesting why it acts nice on this ticker, but not on any other, basically. So, well, I think this will break bullish. Yes, this is a consolidation after a bear run, so you should be cautious. But I think the general sentiment has been more bullish, and well, I don't have a reason why actually. It's more of a feeling, and yeah, well, depends on what information you want to rely on. Definitely you should rely on your own information, but sometimes your gut feeling is very right in some ways. Yeah, so, well, of course, this can break any other in any side. This is very symmetrical. A bit more actually bearish since our recent price action and most of our consolidation phase is quite far from our highs and more, or is at least more near our lows than it is near our highs. A bit at least. So yeah, maybe a reason for caution, but I think you can make money trading this in both directions. So yeah. So well, if it breaks either of these lows, like around 6406, $70, or 7468, about 74, basically 75, you can enter your position to the downside, and if you are more bullish, then you should enter, or you could enter upon breaking $90 or 8988, or this high, which I wouldn't call a high yet, but it most likely looks like one, at around 83, around like $83, and well, yeah, also quite clear. Basically the same console phase like we've seen on CGC, just that this is a console phase after a bear run, not after a bull run. So maybe a bigger reason for caution actually than I thought it was. But still, very clear patterns, and well, I can do indicators on this, but since this isn't trending, I think it's just best to stick with support and resistance at that point, and yeah, move on to CRON. Hope I'm recording. Yes, I am. Very nice. So, well, looking quite similar than CGC or CGC. Very, very big bull move on the VAR lows. Well, I think it's always interesting looking back. Like I've looked at CRON starting. Well, where did I look at it? I think right here. No, that's CGC. Or well, I've started to look at them like at the same time basically. I've started to look at CGC when it was, I think, or no, it was WED, WED, when it broke $30. Yeah, about right here, when it broke $30, I started to look at this, and so basically, this is 11th May, about 11th May, so going to CRON, yeah, around this time. And this was like about $6, and always interesting seeing opportunities you've missed, of course, and you can buy your own ass, or you can laugh at it. And well, I think laughing at it is a bit more relieving than biting your own ass. So, well, still, of course, an opportunity to learn from. But since I want to study this and learn how to do this, I think looking at price is the most reasonable. Then acting too much, and well, of course, acting is important. And yeah, and well, I'm telling you this regularly. Trade on TradingView, paper trade, of course, to learn how to do this and find entry points. But so this is CRON, and yeah, basically in equilibrium, not too recent or not too much price action yet, where I would find a very clear range. We of course have a high of 2510 and a low of 1878. And this would be our lower high, and now our high low about 1922. This will be mostly our low high when we had a nice trade day today, around 7%. So this would indicate that we can find, or we have found, our lower high compared to 18 bucks, around high $18. So, and a very nice touch of our 26 EMA. So also nice that our moving averages are respected that nicely. So yeah, well, I would wait on CRON. Well, first of all, it's very extended, and you should have entered back here or back here. But well, if you are still looking for an entry point, or maybe you want to add to your position, I don't know, you can, should, or whatever, you can enter upon breaking $23. Like 23.15, 23.10. Or if you're a bit more conservative and you want to wait for all-time highs, you can of course enter upon it breaking 25.10. But anything else, I think this will hold our moving averages over the time of this Gonzo phase. and well, basically move sideways until we see more volume and more price action or more bullish. I think this won't break today. Well, of course it can. Blah blah blah. If it does, if it breaks around 18 high 18 bucks or 1872, but then I think this still will move actually in a bull flag. Like if we break this, then I think this will move into a bull flag and act like this. If it breaks, I think it won't, but if it does, this can also be then a retest around for more or less bear flag we had, which I thought would be an indication for bearish price action, but well, it wasn't. Also, we are very far from our 200 days, so maybe also a reason for caution. RSI isn't too bad. Well, it's a bit diverging, but not really, since this is a lower high compared to this, but this is just lower than this on the other side. Like you can see, there is a line right here, and this is just a bit more steeper. So well, not too bad. Or in my opinion, it's still quite healthy actually for a move like this, like over 100%. So